What's up, everybody? GenExDividendInvestor here. The $1.73 million on the thumbnail to this video refers to the dividend portion of my overall stock portfolio, which is what I go over in depth on my channel, so feel free to subscribe and watch my other videos if you love dividend stocks and want to learn more about me, my dividend portfolio, and how I invest. In this video, I'm going to reveal the top 10 stocks for September that investors on my Dividend Discord chat server voted that they are buying or want to buy. After revealing the top 10 stocks, I'm going to tell you a story of what just happened to me that will highlight just how spicy the market is right now, and I'll tie that back to the number one piece of advice that Peter Lynch gives investors. Then I'll finish this video off by thanking a few of my loyal subscribers. So be sure to watch the entire video as I think you'll enjoy it. For context, Discord is a free chat service over the internet. My Dividend Discord server now has over 4,500 investors on it and is growing quickly. In fact, I am the number one Google results if you type in Dividend Discord server or Dividend server, or the world's largest Dividend Discord. Pretty neat. We have dividend investors in there with decades of experience that became millionaires through investing, and people who have never invested and are just interested to learn, and everything in between, from teenagers to people in their 70s from 40 countries around the world. On my Discord, I run a poll which lets people vote on all stocks they're buying or plan to buy each month, and I get hundreds of votes per poll, with more voting all the time. So these dividend stock picks come from a bunch of investors who are focused on learning and becoming better. Finally, I want to sincerely thank all of you folks that have used my affiliate link, which helps me continue to grow my channel. As an Amazon associate, I earn from qualifying purchases, which means I get a small commission after you click on my link, which is in the description of this video, and then you shop for whatever you need. The cool thing is that it doesn't cost you anything other than the time it takes to click on my link before you go shopping as you normally would. If you do decide to do that the next time you go shopping online, then please leave me a comment or email or DM and tell me you did that, so that I know who my outstanding subscribers are that are helping me grow. Thanks, I really appreciate it. And as is my normal disclaimer, just consider this entertainment and not financial advice. Please subscribe, hit the thumbs up button, and click the bell notification. Thanks! Okay, the 10th most popular stock for September with 14% of votes is one I don't own, and that's Intel, ticker INTC. I'm using Seeking Alpha for this data, but I noticed that many stocks had a bad number for number of consecutive years of dividend growth, so I'll verbally correct it where I can. Intel is a giant in the semiconductor world. Their latest release will be the Tiger Lake 11th generation CPUs. Intel hasn't been getting a lot of love in the tech sector lately, and is trading much cheaper than its peers, which is part of why it's compelling to me. They recently announced they were behind schedule on delivering their new 7nm chips, which made their stock take a hit, but which I personally don't think matters much in the long run. Intel has a weak 2.67% dividend yield, an awesome payout ratio of 27%, and a decent 5-year dividend CAGR of about 7%. They are at an awesome PE of 9, and they are at about $51 per share, which is above its 52-week low of 43 and well above their 52-week high of 69. Intel's looking pretty peachy to me. Okay, the 9th most popular stock in the poll with 15% of voters is a dividend growth investor's favorite I own in 3M. 3M has a decent 3.58% dividend yield, a decent payout ratio of 71%, and a good 5-year dividend CAGR of 11%. Again, ignore the number of consecutive years of dividend growth here from Seeking Alpha. They actually have something like 61 years. They are at a PE of 18, and we see they're at $162 per share, which is below the 52-week high of 182 and above their 52-week low of 114. Now, the 8th most popular stock in the poll with 16% of voters is another dividend growth investor's favorite I own, Realty Income, aka O. O has a good dividend yield at 4.4% and has 26 years of dividend increases. We see an okay 5-year dividend growth rate of 4.38%. So far, Realty Income has been weathering this pandemic well. I'm wondering if they will seek out an acquisition from some of their competitors who aren't doing as well. If you're interested in learning how to evaluate REITs, then I recommend you watch my Realty Income video, where I explain things in more detail, like how price to AFFO ratio basically measures a REIT's ability to pay dividends to its shareholders, and how understanding of triple net REITs tenants is also helpful, and that REIT dividend payments are unqualified, so they are taxed as regular income, rather than the nicer capital gains that most regular qualified dividends get. Of course, don't take that as tax advice. We see they're at $62 per share, which is below their 52-week high of $85 and above their 52-week low of $38. Okay, the 7th most popular stock in the poll, with 17% of voters, is a favorite of many dividend growth investors, and that's Altria, ticker MO. MO has a great 7.86% yield, a bit high of a payout ratio at about 80%, and a great 5-year dividend CAGR of 10.4%, and an amazing 50 consecutive years of dividend growth, making them an elite dividend king. They're at almost $44 a share, well above their 52-week low of $31 and below the 52-week high of $52. Altria has been evolving its strategies to remain strong, including taking a $12 billion 35% stake in Juul as it looked to expand its product offerings, though that investment doesn't look quite as compelling as it originally did. Smoking rates have been declining, and Altria said they expect the US cigarette industry volume to fall about 5% in 2020. So much like oil, you are investing into headwinds, but that's part of the reason you can be rewarded with higher yields. The 6th most popular stock in the poll with 20% of the vote is another I own in AbbVie. AbbVie has a great 5% yield, a sweet payout ratio of 45%, and a crazy good 5-year dividend CAGR of 21%. AbbVie is at 47 consecutive years of dividend growth because AbbVie was spun off from Abbott Labs about 7 years ago. The one big concern with AbbVie that any investor should be aware of is that their number one drug in terms of revenue, which also happens to be the number one drug in the world, is Humira, but by losing patent protection it opens up other companies to make a similar drug which could negatively impact AbbVie's revenue. But AbbVie has been acquiring companies to shore up their drug pipeline. If they can build a solid pipeline, then they should continue to prosper, otherwise they may take a hit. They are at a PE of 21, we see they are at about $96 per share, slightly below their $101 52-week high and well above their $62 52-week low. Now the 5th most popular stock in the poll is another dividend growth investor's favorite that I also owned with 22% of the vote, and that's Pepsi. Pepsi has a low 2.96% yield, a kind of high payout ratio at 76%, a good 5-year dividend growth rate of 8.4%, with an awesome 48 consecutive years of dividend increases, making them almost a dividend king. Pepsi has a high PE of 28 and are around $140 a share, below their 52-week high of $147 and well above their 52-week low of $101. I did a quick discounted cash flow analysis on Pepsi and I came out with something in the 70s, so $140 stock price seems too spendy to me. Their debt has been trending up and their cash flow isn't growing quite like I'd like to see. So I love me some Pepsi, but it has some issues you might want to explore. The 4th most popular stock in the poll with 23% of the vote is Johnson & Johnson, a stock I'm also long in. J&J has a low 2.64% yield, a great payout ratio at 51%, an okay 5-year dividend growth rate of 6.3%, and an awesome 57 consecutive years of dividend increases, making them a dividend king. J&J has a decently high PE of 27 and are at $153 a share, almost at their 52-week high of $157 and above their 52-week low of $109. Now the next most popular stock at number 3 in the poll with 25% of voters is Microsoft, which is probably my favorite dividend growth tech stock. Microsoft has a very low 0.9% yield because their stock has been on fire, but have an awesome payout ratio of 32%, which basically means they should be able to raise their dividend for a long time. And they have a great 5-year dividend CAGR at 10.5% and a solid 16 years of dividend growth. I've held Microsoft since the 90s and is my best total returns dividend stock. I did sell out of it relatively recently, like all of my stocks, but then quickly bought back in, and you can hear that crazy story in my video called The Time I Sold All My Stocks. They're at a very high P of 39, and we see they're at about $225 per share, which is just below their all-time high of $231 and way above their 52-week low of $132. Billy the Kid Gates is cleaning up town. Okay, the 2nd most popular stock in the poll with 26% of voters is a powerful tech company I also own, which is Aapl Computer. Apple stock has been going up like crazy, and in fact just did a 4-for-1 split, so I calculate their dividend yield is at 0.64%. So their dividend is now 82 cents per share per year divided by the price of 129, which gets us to that 0.64%. So Seeking Alpha has it wrong when it says they're at 0.16% yield, and so does Google says they're at 2.54%. Their payout ratio is actually 26%, and their 5-year dividend CAGR is an awesome 10.5%. Now you might look at this and think Apple fell off a cliff, but this is just that Google data hasn't yet accounted for the 4-for-1 split that just happened, which throws off all its metrics. It's listing Apple's market cap at $550 billion when it's actually over $2 trillion. And it's showing a PE of 9.81, but they're actually over 30. So I imagine at some point they'll normalize the data to properly account for the split. Apple is currently the largest position in my dividend portfolio, and I now have exactly 1,739 shares of it. Okay, and now we come to the number 1 stock in the poll with 35% of voters getting all hot and bothered over it, and that's none other than AT&T, ticker T. T has a crazy nice 6.9% yield, a good payout ratio at 65%, a weak 5-year dividend CAGR of 2.09%, with a great 36 consecutive years of dividend increases, making them a dividend aristocrat. Now in my opinion, T has 3 strikes against it. Number 1 is that their stock price has meandered for a long time. Number 2 is their dividend CAGR is weak, and number 3 is their debt is bad. So why am I excited about them? Well, because they have a new CEO and an activist investor that are all focused on driving down debt and getting rid of weak assets, and I think if they can continue that for a few years, they can get into the double digits of billions of dollars of debt, which would make them look far more compelling. That is a lot of ifs, but it's usually best to invest when others aren't, not when everyone is. So it'll be fun to see what AT&T does over the next few years, and to see if it does what I'm thinking they will. T has a decent PE of 18 and are at $29.57 a share, below the 52-week high of almost $40 and above their 52-week low of 26. Okay, let's move on. Now I'm going to tell you something that was just told to me which shows you that things are way too spicy in the market. I have a wealthy realtor friend who just told me that he called up his broker to invest a large chunk of cash into Tesla. He told me his broker told him not to invest because Tesla had just shot up and that the time to invest was months ago. My realtor friend said he still wanted to invest because he thought that all of the Robinhood traders would keep the stock flying. It concerns me when I hear something like that because it's a classic warning sign. It's literally what I was hearing in 2000. And as Elmer Fudd would say, be very, very careful. I'm sure about 3 of you got that reference. So I want to share a quote from Peter Lynch, arguably one of the best investors of all time. He said, "Stocks are not lottery tickets. If a company does well, the stock does well." Those statements are both profound and foundational to what you need to understand if you want to become a successful investor. I worry when I see people trying to get rich quick by throwing their money into speculative stocks and penny stocks. Now, I don't put Tesla in the speculative stocks or penny stocks category, but even though I'm long Tesla, I think you have to have some big cojones if you're jumping in at this point. But for the people who are putting their money into penny stocks or into hot IPOs or equivalents, I'd like to ask you this. Do you really understand what you're investing in? Have you looked at the company's balance sheet? Do you really think it's smart to invest in a company who hasn't actually made a product but whose CEO says they will and it'll do well? If you see a headline that has the words penny stock in it, are you clicking on it because you think it's a sound business with a proven track record, or are you clicking on it hoping to get rich quick? Now I want to thank some of my subscribers who have supported me by becoming Patreons. So let's start with the aristocrats first. This group will all get to test my new 2.0 spreadsheet product, which I'll be doing a video on soon and will blow you away when you see it. I'm super excited to show you. So I want to thank, in no particular order, Richie Rich, Rajun, CXXIX Quiz, which is a number I think, UCF Go Nights, Kurz, and Martin from Investing in Book Reviews, who just started a new YouTube channel, so go show him some love and subscribe to him. I also want to thank my new champions, so thank you to Danch, Eelva95, Willers, Sublime24, Tom, and Frank Mularsik, who just started a new Dividend channel, so check him out and I'll put his link in my description of my video. And if you haven't yet, don't forget to check out my Dividend Discord server. You'll have a blast and you'll meet a ton of new friends. Thanks for watching and I'll chat with you again real soon. I am not a financial advisor and these videos are for entertainment, inspiration, and educational purposes only. Investing of any kind involves risk. I am only sharing my opinion with no guarantee of gains or losses on investments.